Hey guys, Boris Oscar from BK. Great to be with you. Please note that the following video is for educational purposes only. No claim is made to the accuracy or efficacy of any trading strategies contained in this video. And please, as always, do your own research. But let's start this week, which was an absolutely insane week, with one of the interesting things that I've done, which is a very, very simple scalping method to trend. Last week I had shown you guys a scalping methodology against trend, the mean reversion trade. But my overall bias in the currency market is to stay simple and to stay true to trend. This week was a perfect example of why it was so important to do so. The strategy that I've been using very sparingly this week, mainly because I just simply haven't had time. I was pretty much away most of the time, but with pretty good accuracy and efficacy, at least in the small samples that I've tried, is just a very simple trend scalping strategy. As usual, using all my risk pairs, which is euro yen and pound yen, here's what I did. You basically have two simple moving averages. This is the 20-period moving average, this is the 100-period moving average, this is the 5-minute chart. And the whole function here is to stay on the right side of the move, which means that basically you only take trades to the long side when the price pierces the 20-period moving average from the bottom to the upside, and you don't take any downward pierces until and unless the price comes all the way below the 100 SMA. Basically, the 100 SMA tells you the long-term trend is to the upside. You only take long-term scalps in that position, and you take a scalp basically on a cross of the 5-period, of the 20-period on a 5-minute chart with a 15-point target, a very short target, 25-point stop. And because obviously you're going to get these bursts of momentum and bursts of retracements, and you're just trying to catch these bursts of momentum. So in this particular case, this would have been a good winner. This would have been a nice shot. This particular trade would have survived the stop and would have also probably gone in the money. But what's important is that as the time progresses, one of the things you notice is as price loses its long-term trend here, you no longer are going to take any kind of upside trades. And this is one of the great things I like about this trade is that it keeps you on the right side of the true trend. So by staying away from any of the upside breaks, you only now start taking only downside breaks. And here you would take a downside trade through the 20 SMA, and another downside trade through the 20 SMA, and so on and so forth. Of course, today you basically had one of the interesting things today in the opening session is that you actually stayed in Asia and Europe to the upside because both moving averages one above the other. So if you'd taken a trade up here, you would have made target. You've taken another trade to the upside, you would have made target. But then, come North America, we have massive change of trend as the euro gets weaker. And then, you frankly almost didn't even have any scalps here because it was such a sharp sell-off. You may have wanted to sell this trade over here down to the 20 SMA, but it's not really the clear setup. What we like to see is a cross from above to the below. But one of the things that I did today that I only had a very small chance to do was actually use this on a fundamental basis. This is dollar CAD coming out at around 7 o'clock in the morning, which was the only time I had to trade while the kids were asleep, against the Canadian employment numbers, which were presumably a little bit better than expected. But one of the interesting things that you see here is that you watch the price action, not necessarily the results. The results, although they were a little bit better than expected, actually suggested that the Canadian economy really wasn't generating so many jobs that the BOC was going to be forced to raise rates again. It was almost a disappointment. So one of the things that happened was after the price action released, you saw that the price went. This is the 100 SMA. No, I'm sorry. The yellow is the 20 SMA. The red is the 100. The price went both above the yellow and the red, establishing now a long bias. And I actually just simply scalped to the long bias by buying here and just kicking it out very quickly here. I could have made more points had I had a chance. And here you had another opportunity later on in the day to buy the long bias and continue with the trade to the upside as it went up, and make another small amount of trades. Again, in a scalping situation, you're always trading with either a small or hopefully a small negative edge, because you need, when you're buying the breakouts, you need the room for retracement, but at the same time, you're very frequently not going to get a lot of upside potential as possible. So I found the 15-25, 15 target, 25 stop to be a very, very good formula for mixing it up on a short-term basis on a 5-minute chart. So this was dollar CAD. It worked out great today. There was a couple of euro-yen trades back in my archives that I'll show you next week. But generally, what I'm going to do is trade this much more consistently next week, at least for the first front of the week when I'm around, and show you some of the results probably either next week or the week after. In the meantime, one last final announcement that I am going to Pasadena, and I'm going to discuss all of these things live in person, one-to-one with any of you who would like to join me at the seminar on June 11th. This Friday, I will be in Pasadena at the Traders Expo, so if you're going to get a chance to be there, please register for my seminar where I'm going to discuss all the short-term trading techniques. It's called Fast and Furious Trading. I hope to see you guys there. I'm wishing you the best of luck and the best of trading, and a great weekend. Over and out. This is Boris Schlossberg for BK.